FX Nation, what's up guys? Welcome back to the channel. Welcome back to another video. And in this video guys, as you guys voted, we're going to take a look at TDI. Let's go. Alright guys, so before we get started here on this particular video, if you guys have any ideas for future videos, do me a favor, hit them up in the comments. Let me know what future videos you'd like to see. Videos that have, even videos that have to do with different strategies. If you'd like to see different strategies on this channel, let me know in the comments. Alright. For the next couple of videos, I'll be taking again more polls. So if you're not subscribed to the channel, hit the subscribe button. Make sure you share the content and like the video. And of course, guys, we're going to keep this as simple as possible. All right. Now, there are tons. I'm sure there's tons of videos out there on YouTube University when it comes to the TDI. Now, I'm really just going to break this down for you as simple as possible, like I always do all my videos. And I'm only going to basically talk about how I use the TDI. I'm sure there are hundreds of other ways that you can possibly use the TDI itself. But me personally, I only use a TDI as a tool. I don't base trades off of it. So definitely keep that in mind. This is just a tool, guys. It does not replace your ability to be able to see the patterns that are happening on the actual candles. Okay, so very important that you understand that these are just tools that you can use for confirmation of what you think might be happening. All right, so with all that being said, guys, let's just start breaking the components down of the TDI. All right, so essentially what it breaks down to is you have three major lines here. You have the upper line, the mid line, and the low line. So the low line is going to be 32, and this basically, if you ever seen a RSI before, kind of basically the same thing, right? You have like, your oversold and overbought areas and the middle line, which is the 50 line. Same type of concept, okay? You'll see that basically the TDI is just a bunch of different indicators put together to work as one, okay? That's really all that it is. But the lines here, the upper line is 68. The lower line is 32. The midline, of course, is 50. Okay. For those of you that ask, how do I get this particular indicator or this TDI on TradingView? Literally, just go to indicators up here and then just type in TDI. And you'll see a bunch of them come up. Okay. This one specifically that I'm using here, I believe it's this one right here. So just pick any of them. They're all the same. Just make sure that the settings are 32, 50, and 68 for the upper, mid, and lower line. All right. And you can do those settings right here. You'll see 32, 50, 68. You don't need these other levels here. I don't use them. The 80 and the 20 and all that stuff. I don't use any of that stuff. I keep it pretty simple. But yeah, so those are the levels here. So overbought, oversold, and the middle line. Very simple. Just like using like an RSI or stochastics and stuff like that. So the volatility bands. Okay, these are basically like Bollinger Bands. All right. Anytime that they are contracting together, that means that price is pretty tight, moving in a tight zone or area. And then of course, as they expand, you'll see price movement take huge swings. Okay, same thing as Bollinger Bands. Essentially, they just call them volatility bands. The yellow line is essentially the market sentiment. Okay, that's what the overall market direction is going. All right, so think of the market sentiment as like, let's say, a 200 EMA. All right, it just basically tells you the general direction, the general bias of the market. If the market is below the 50, obviously there's there's people selling, right? If it's above the 50, obviously they're buying. Same concept, guys. If the yellow line ever gets to, like, let's say a 32 or 68, same concept as the RSI where it's overbought or oversold. Same thing. Okay, doesn't change. If you guys don't know about RSI or anything like that, search it up on YouTube. There's hundreds of videos on it about, and they'll explain it to you. All right. The green line is basically the current price sentiment. So basically, this is like literally the movement of price as it's happening on the chart. Okay. And then the red line is the signal line. That's basically how we get our confirmations of signals to potentially have a trade set up. All right. So how can we use this essentially along with the charts together as confirmation? So let's go ahead and look at a couple different examples of how we can use the TDI to help us confirm or not confirm what we're seeing. All right, so let's take a look at that now. All right, guys, so the question has become, how can we use this to our advantage? How can we use this as a tool to help us confirm different aspects of our trading strategy and potential to just help us get into more accurate trades? And at the same time, how could we possibly use this tool to help us keep out of bad trades? So we're going to take a look at both types, how it can help us and then get into good trades, and then also how it could help us stay out of bad trades. So first example on this is Euro Pound. And as you can see, here is our Asian range. And then we do see that after the Asian range, we had a huge move down. And basically, we created a type 1 setup. Okay. If you're new to the channel, guys, and you don't know what I'm talking about when I mean a type 1 setup, just look on the top right corner there. And it'll take you to the playlist. So you can literally start from the beginning so you don't feel lost. All right. But anyway, so we had a type 1 setup here forming with a nice little W, and you can see here the price action basically creating a W as well. Now, one of the main factors that I look for is when the green price line is basically outside of the blue bands like this. Okay. So anytime that the green line is outside of the blue bands, all right, that is definitely something that catches my eye, and I'm looking for potential trade setups. All right, so as you can see here, we had basically a nice W formation here, and we also got the same W here on the TDI as well. So, I mean, pretty clear to see how we can use this essentially as a confirmation of this trade. Okay, let's take a look at a couple more examples. All right, so here is essentially another example. We have our Asian range here, and then you can see right outside of the box, as soon as we get outside of the range, we end up creating a second leg of a W here. And you can see we go ahead and we rise. Another thing that I want you guys to take into account is the fact of the yellow line, which is the market sentiment, is also above the 50. Okay, so that essentially tells you as well that we should be looking for buys in the market. All right, so again, very simple. Okay, we have the crossover right here of the green and red. Crossover here, the yellow is still above the 50, so you got 3 signals right there letting you know that we're good. If you were to switch over to a line chart, you can see the crossover of the 5 and 13 as well in this area here. So you just have a lot of different things that come together to confirm what you're seeing. All right, let's take a look at another one. So this example, I want you guys to look as far as for, let's say the New York reversal. Okay, so obviously we had a type 3 setup coming out of London. Okay, went straight up, And then as you can see here, the opening of the US session, we ended up getting a nice M formation to go back down as the reversal. Well, what happens? So all the way starting at like 4 or 5 o'clock, we were already outside of the bands, and you can see this is just straight up arcing until it finally crosses over here around 7:45, and then it just stays, the green line stays underneath price, and then just comes straight down, and you can see what happens here as the reversal happens. Now this reversal essentially was about maybe 27-28 pips if you waited for, let's say, the second leg and the cross to happen, which is right here. But essentially the biggest thing is, once you spot the pattern that you're trying to look for, like in this case it was an M formation, you want to make sure that you can try to see that M formation form here. So for example, you can see basically that we went up, came down, went back up, and then boom, and then that was your M. And then here we even had a W form back up, which was that as well. Okay, so you can see that it literally forms the patterns for you as well on the TDI also. Now, one thing I want you to notice is that on the same example here, let's say for the London session, we clearly had a type 3 setup where we were in the middle of the range here, right at let's say 3 o'clock, and we were stuck here, as you can see, and then we just literally rose up. Now guys, this TDI is not perfect. Okay, so this is not, I don't want you guys to think that this is like the golden ticket or anything like that. This is just a tool that when you put it together, it can help you. It doesn't mean that it's perfect all the time. So for example, on this type 3 setup that you see here, okay, there was really nothing at all to kind of help you with the trade setup here. Okay, so I just want you guys to see how this would look here on a type 3 setup, that there's nothing really here besides the market sentiment that tells you it's above the just crossed over the 50, that there's going to be buyers in the area, right, or buyers in this zone. But other than that, there's nothing else here that would have helped you. So just keep that in mind, guys. I don't want you to think that this is like an end all be all, because it's not. Okay, it's just an extra tool, just like stochastics or RSI, Bollinger Bands, all the other indicators. I mean, they're just tools. MACDs, they're just tools. They're not, the end all be all. They're not the greatest things in sliced bread. Okay, they're just extra tools to help you confirm what you're seeing. All right. So here is another example, right? We had the New York reversal right up here. This was 8:15, 8:30, right? We rose. We had a W pattern here from the London, rose up, and then during the London, the U.S. reversal here, what do we end up getting? We ended up getting price moves outside of the bands, and then boom, just crosses straight over like this. This example right here would be like the perfect example. Right? Literally, this would be like the perfect example. Right? Are they all going to be like this? Hell no, they're not. All right? But that would be like a perfect example of how you can use it to confirm. Okay? Even on this W here for London, if you just, let's say, draw out the box here, if you take a look here for the London here, we have basically the current price goes barely outside of the bands, comes back in and crosses right here. This is basically the first leg, comes back up, second leg. Right, so we're already like into the second leg. This is why you always want to always wait for the second leg. This part here I can tell you typically happens always on the first leg of the W or the M. So this right here, man, like 80 to 85% of the time, this happens on the first leg. So when you see this, this is basically, think of this like a alarm going off, in your head mentally of like, okay, we may have something here as potentially like a W or an M formation, right? Because a lot of times this will be the first leg only. So you have to wait for this to form, and then you can take the trade. So here is another example, Asian box here, and then we ended up having a type 1 setup, straight up, and then you can see right outside, and then comes right back in, and then boom, straight down. So again, another example of like literally like the perfect, type of signal that we would like to see from a TDI as a confirmation right there. So here on this example, here's your Asian box, and then you can see that the TDI itself creates basically a mini W down here, and then crosses over. There's your signal, there's your cross of the 5 and 13. There's your trading off the edge right there. And then of course during the second half of London, okay, you ended up getting a second trade here. There's your M, there's your M. So railroad tracks right out of the edge here, railroad tracks straight up 530. You have basically the second leg already crossed over here, which is this one here, and then this, here's your M there, that would have been traded. So on this example here, here's your Asian box, and then we have the move up. We had basically a star pattern right here form. So this is just one confirmation here. Second confirmation would be what? If you look at the TDI, we moved outside of the bands and then came sharply, literally sharply right back down, straight down, cross the red, and that would have been your signal there to enter the trade, and then all the way down. One thing about the TDI that will help you, at least it helps me, is you ever noticed when you get into a trade and price literally goes against you like this right here, like it did here, right? And you're sometimes thinking like, man, I got into a bad trade, and sometimes you freak out over it, right? Well, if you look at the TDI and if you look at the current price, as long as the current price is staying below the red signal line, you're good. Okay, so you're good as long as the green is staying, in this example, as long as the green is staying below the red signal line and it's not crossing over it again, you're good. So no need to worry, because this can help you essentially stay in the trade and not, get out too early when you could have caught the entire move, right? So even on this trade here, when we get to the New York session and we look for the reversal, we have one, came back up, came back down, and retest again. Basically, here's your W on the TDI, and then it moves back up and then settles. By the way, guys, I don't know if you're noticing this, but this is literally the same pair. So I'm just literally going back days, back days, back days. I mean, it's the same shit on every, on all the pairs, but all the setups, I'm literally finding just examples on one pair. So this example here is basically a trade out of the edge, where you would have an M formation here form. First leg is inside of the box, second leg literally is right the last candle outside of the box, and then boom, it drops. Here is basically your M dropping, and then you notice when you get down to the second half of the London session, 6:45 or so, you have a W here, boom, coming back up, and there you go. So if you just use this, guys, for confirmations, to help you potentially see what you're trading, I mean, it's a great tool for that. But definitely never base any trade solely off of a TDI indicator. Okay, you want to have multiple forms of confirmation. You want to have obviously the pattern and the timing first. Look at what we just talked about, cycles, the other day. Look at that first as well. Look at all these different things, different aspects of it first, so you can understand what's going on. This should be just something that extra that you can use to confirm. That's all it is, guys. It's an extra tool. I can't stress that enough. Yeah. So here, London Asian session here again. You had to move right at the beginning of the London session here. If you turn it into a line chart, there's your M. Straight down here, you have your M here. As you can see, the second leg is what crossed over here, just like it did on the line chart. So this right here would have been about the first leg here, second leg up, and then straight down. You can see the second half again of London produced a W going back up, and this basically would have ended up being a continuation trade, is what it was. So, but the initial trade was right here. All right, so I want to show you some examples of how of why this is only used as a tool, and you shouldn't base any trading decisions off of it, because sometimes this is just wrong. So like, here's an example. Here's your Asian. We have price move down, and then you clearly had a move outside of the bands, coming right back in, and you would think you'd be setting up for a buy, right? Because you'd be thinking this is a type 1 setup, and it didn't. It just kept going, right? So this is a clear example of something where you can be like, hey, this didn't work, and so this is why I'm telling you that, to make sure that you use this only as an extra set of eyes or tools for you, and don't make any kind of trading decisions based off of this alone. If you were just following the rules, 5 and 13 cross, never cross, so that would have kept you out of this trade. But let me find some other ones here so you can see some examples. I mean, here's another one here as well, where you had price come all the way down outside of the bands, crossed over, and it really didn't do nothing. You see price literally just moved sideways from 445 all the way through damn near 10 o'clock. So 6-7 hours, moved nothing but straight across. And this is what I'm talking about, that you should just use this, again, as a tool, not as the end all be all of everything. So here's one way that you can use the TDI to basically kind of help you avoid just certain pairs during the London session. So this right here is a good example, because essentially you can see that the price line itself was literally moving straight across in the middle of the 50, which really is going to not allow you to produce any kind of a good trading setup anyways. So really the trade setups that we're mostly interested in with trying to confirm are trade setups where we can take where we see the price sentiment going all the way up to like the 68 or the 32. Those are going to give you essentially the best possible setups that you'd want to trade with. So trade setups like this here, as you can see here, when price comes all the way down, to either the 38 or the 60, 32 or the 68. Those are the really good ones that you want to actually get into and trade. Here's another one here. Price is at the 68. And I mean, you can see a nice setup here for that also. Price is down here. Price is close to the 32 right here. So things like that. That's what I mainly look for, guys. Is I mainly look for whenever price is all the way below or above. Okay, because I know that there's got to be hopefully a move that we can grab that brings it all the way back down again. All right, so those are the things that I look for on the TDI. I don't always use it, and I just again use it as a tool for confirmation. That's literally it, nothing else. All right. So guys, I hope you enjoyed this video as much as I enjoyed making it for you. Hit the subscribe button if you're new to the channel, guys. Thank you so much for your support. We really appreciate it, and look forward to the next couple of videos, guys. Have a good one. Guys, one last thing. Thank you so much for watching my videos. I really appreciate the fact that you take the time to watch my videos. I really hope that I've added value in each of the videos that I make for you guys, and I hope that you're learning something. As always, guys, please make sure you subscribe to the channel. Please like and share the videos if you found value in them. And also, don't forget to visit our website at www.fxntrading.com. Once again, guys, thank you so much. I'm truly blessed.